Hi, everybody. My name is Jeff Smith. I am the current Chief Information Officer for Advance.Fund. And I will be telling you about crypto funds, decentralized funds, their current status, and what the future holds for us. So let's start from the beginning, from the definition. So a crypto fund is a managed fund of digital assets, which is controlled by a fund manager, invested by an investor. And the ultimate goal for the crypto funds is to gain assets for all the parties. That means investors, that means strategy providers, and that means fund managers. So for you to understand a little bit about funds, let's go into history. So the first funds started in the 40s. That was like 30 years before even the computer boom industry and before the internet. Then we see that the little in 2000s smart funds start to boom. We see a little bit of deregulations from the authorities, and we see that lots of investment funds rise. Then we see 2009, and we see Bitcoin coming to the scene, and also crowdfunding platforms like Kickstarter. And only in 2012, the regulation was allowed for people to invest in Kickstarter. But Bitcoin doesn't care about that. And from that place, we started to go a little bit faster. We see crypto exchanges launching. We see first ICOs generating millions and even billions of funds. And we see that in 2018, it's the era of crypto funds. So a little bit about the options that you have right now. Currently, there are three options for you as an investor. First is common hedge funds, which has a difficult entry barrier, 100K of registered income. We have cryptocurrencies and individual traders. So these people are able to easily purchase cryptocurrencies and trade them. But it is also very risky because there were lots of cases of theft, crime, misplacement of assets, etc. And then we see crypto funds. The entry barrier is also very low, but the risks are high as well as the profits. So let's talk a little bit about the strategies. Here is the amount of funds that we see right now. So as we see, 2017 is booming already, and currently there's 226 crypto funds there. Now, the crypto funds, we start from the initial traditional common funds, but then with the crypto disruption, we see that the funds are transformed into crypto hedge funds, investment trusts, index funds, and also the new platforms and marketplaces for investors. Now, here is a comparison table of all the crypto funds and how they differ from each other. So as we see, the trusts and hedge funds are not public, so they're not available to private investors. And we see the crypto index fund and digital marketplaces are tokenized, they are public, and they are available for you to invest. Here is a breakdown of the strategies that the funds use. We will discuss every one of them in particular. So the first one is liquid ventures. This is basically ICOs, investing in ICOs at early stages and finding promising protocols, technologies, and infrastructures. So after liquid venture, the second thing is trading. Trading, the most important part, which is, okay. Trading. So trading is a method for funds to optimize their risks as well as increase profit. They use leverage positions and they use short and long positions to gain profit and curb market impact. Now we have AI bot strategies. These are mostly arbitrage trading, algorithm trading, and these bots help traders gain profit. Initially, AIs and bots were available only for institutional funds, but right now we see a boom in the bot industry, and it takes a big part of the investment strategies. Then we have token baskets, which is basically a basket vehicle with liquid tokens. And you are able to purchase baskets of different kind of assets and in this way diversify your own portfolio. Now we have index funds. Index fund is basically a basket fund, but in the basket we have the top valuable cryptocurrencies, which make this a very good option for investment. Then we have fund of funds. This is the biggest opportunity to diversify your portfolio. So basically, while investing in the fund of funds, you're also investing in funds that this fund holds. And we have lending and crediting, which means earning interest from these operations. Okay, and there are also alternative investment strategies, which is called, for example, proof of stake mining. The idea behind this is that you stake amount of money in the stakeable wallet and you receive profit from confirming operations like this. As you can see, it also can grant some benefits. And then we see the cryptocurrency marketplaces. So these are basically platforms which allow strategy providers to create their own portfolios and additional users to follow this strategy. This is what the most promising platforms are. Now let's talk a little bit about operations. Operations in crypto funds is also very tedious and requires lots of energy. First, we have a fund administrator. A fund administrator is a person who calculates the net asset value of the fund. He also tracks the entrance and exit of all the investors. He calculates the performance fees and all other fees that are there. In terms of fiat money management, crypto funds use segregated bank accounts. That means that a client opens a bank account and gives the trading-only option for the fund managers to use these funds. So this eliminates risks such as theft, bankruptcy, and whatsoever. But this is only in fiat. Now we have crypto asset management. So crypto asset management is also very important, and a single error can basically ruin your whole business idea. So it's wallet setups, managing of exchange operations, OTCs, making sure that the funds are secure and all the actions are tracked and reported. A little bit about regulation. So right now, the hardest regulator is the SEC, which is the Commission for Securities. Now, typically, if you want to have business with American investors, then you have to be compliant with all the American laws. So currently, the SEC has very strict regulations. Once you deal with securities, then you have to have audits, then you have to make sure that you're registered with the SEC and everything that goes with it. Plus, the audit is sometimes impossible if the fund deals with new protocols which are not trackable and reportable as blockchain of Bitcoin. So in terms of regulation perspectives, what I see right now is that the regulation is trying to limit the access to the public. So basically, we will see a motion where only accredited and qualified investors will be able to invest. So right now, a safe bet would be investing in a fund which already has, for example, a broker's license, making it legal for you to operate and invest in fiat as well as cryptocurrencies. So when choosing a crypto fund, what you need to look at. First thing is it has to be legal. No questions there. It has to be secure. You need to make sure that your funds will not be stolen, or the company that collects these funds, that it will not go bankrupt. Then we have convenience, access to quality information. We need to have a well-balanced portfolio, so you need to watch the performance of the strategies of the portfolio. And as well, there needs to be transparency. So everything needs to be tracked, reported, sitting on the blockchain to be analyzed, etc. So the future, what holds the future for us? First thing is market analysis, which is the most important part of the crypto fund. We carefully select the information about all the potential investment perspectives, and we make sure that this information is valid and accurate. in the future, we think that artificial intelligence will be able to do this job more accurately and with more benefit from it. So then we have scale. Right now, crypto funds, an average crypto fund can deal with 100 projects at a time. But as the development of this whole sphere, we'll make sure that we need to work with thousands of projects in like 2 or 3 years, and even millions of projects in 4 to 5 years. So in terms of decentralization, so the most important thing here is to be able to collect money and investments from all people around, not without dependence of the infrastructure and on the legality of this. And everybody needs to be able to invest in the fund. So in here we see that a fund has different ICOs, and every ICO has its own tokens and corresponds to the portfolio, the investment portfolio. And in terms of legal perspectives, a fund needs to be legal among lots and multiple jurisdictions. So in the future, the funds will be public. So no big liquidity providers will be preferred, and that's very important because everybody will be equal in terms of investment and the most important thing is AI synergy. So if we have AIs analyzing the strategies that the investors would invest in, we need to have AIs working with each other, forming a syndicate, and make sure that these AIs make profitable predictions. So thank you very much.